Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Genus Power. A lot of queries have come in for this stock, so let's understand how the business is doing and what you need to do in the stock. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Genus Power. The company was established in 1994, so it has been around 25 years for the company being in existence. It is divided into Genus Power and Genus Innovation, and I'm going to talk about Genus Power, which produces meters for electricity, and these are smart meters. So they provide electricity equipment. They also provide solar solutions, and mainly they are into smart meter. And with the smart city project getting into progression from 2014, this stock came into limelight and ran up a lot between 2015 to 17. The client include SL Group, CESC and BSES. So this is a strong clientele that the company has, because BSES is a state-owned organization, and it is very hard to get orders from a state or government organization for any private company. So this is commendable on part of Genus Power. It is a leading smart meter provider, as I said, and it is really helping in rural electrification, and this is where the government was pushing for over the last 3-4 years, and people really understood the thing that the Genus Power will get a lot of orders and will increase its profitability over this period. But has it happened or not? Let's understand that. So the financials, if we see, the sales have increased by 23%, which is pretty good, from 223 crores to 275, as you see. And the profit growth has been tremendous, about 100%. But this is because of lower interest cost, and this is magnificent because companies which is into infrastructure, electrification on capital goods, etc., have high debt, whereas a Genus Power has a low debt ratio, and the debt is reducing year on year, quarter on quarter. The market cap of the company is 633 crores. The net profit margin is around 8-9%, which is decent. I won't say quite very good, but quite decent in the kind of business that it is into, and it trades at a PE of only 7 at the moment. So the performance of the company and the stock, well, there has been an exceptional growth on the profit front as well as on the sales front in second quarter of FY20. The stock is down around 80% from its 2018 peak. So with the kind of profitability that it is showing, it is at a very attractive level at the moment because the stock is fallen so much. It has a very good dividend yield of 2.3%, so one has to take that into account. This company not only makes profits but also distributes its profits with the shareholders in a big way, with the dividend yield being so high. And management is also deleveraging, that is, their debt is coming down, which is also a positive for the company. But why did the stock crash then, if so many positive things are coming out of Genus Power? The thing is, the company had high debt earlier, so the buying has taken place after the Q2 results, not to a greater extent, because people are shying away from it in small cap because of there are many reasons of it, and everybody is brushing all mid and small cap in the same way. Uh, but earlier on, over the last 2 years, high debt was a major reason for the stock to fall so much. Election year in 2019 was also a reason, because they won't be getting so much orders. So 2019, 18, 19 saw that big fall in the stock. the cost of capital kept rising between 2015 to 18. So it was not that interest rate cuts were happening. Interest rates were either stagnant and the banks were raising interest rates, or even the benchmark interest rates were getting higher. But now things are changing for the better for these companies. Remember that with high debt, if the interest rates go up, they would have to pay a lot and then profitability shrinks. Small cap sell off was another reason for the stock to correct so much, and you have seen that even though the large indices Nifty and Sensex are making new highs, small and mid caps are not quite there. In fact, they are down. I can tell you about the small cap index. It was 20,200, which was the peak. It is at 13,500, so it is down 30% from its highs, whereas the large cap indices are making highs, and this is where the anomaly lies, and where I think there will be correction, and we will either see a major correction in Sensex and Nifty. Major means around 25 to 30%, which looks highly unlikely at the moment, or a major up move in the small and mid cap, because this deviation from the mean cannot stay for long. So small cap sell off was a major reason for why the stock fell so much. And the real estate slowdown, infrastructure slowdown over the last couple of years has also taken a toll on companies like Genus Power, because if there are lesser homes that are made and lesser homes that are bought, then there will be lesser, you would say, these meters, power meters that would be installed, because there would be no houses to install them in. So all these reasons, at least these reasons apart from others, have made sure that the stock has remained suppressed over the last 2 to 3 years, at least the last 24 months. So what needs to be done in the stock? Well, buy heavily and have a 5-year view. That is my view. I mean, I won't say that if you have a very low risk appetite that you buy heavily, but you can invest in this company. Uh, if you don't have a very high risk appetite, then you can invest only 5% of your portfolio. Otherwise, you can increase your exposure, because these valuations are looking very attractive, such as in Genus Power or in NBCC or in other stocks. But you have to be careful in mid and small cap, and I say that for all mid and small cap, because of the management issues and integrity issues plus auditors issues that take place in these companies, and we as retail investors don't know much about it. But purely on numbers and whatever news that is in the market, that is quite prevalent and commonly available for everyone, purely on that front, the stock looks very attractive at these levels. Keep track of numbers should be good and should be coming out good, plus the debt need to reduce, and look at the margins every quarter, or at least after 2 3 quarters, and keep on investing in as an SIP manner. uh, if you have bought it earlier at around 60 70 rupees, then do not average at these prices, just hold on to your positions. And if you buy it from here on in, and if the stock keeps going down, then again do not average. I never recommend averaging a share when it is going down. So this was my video on Genus Power. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.